in this week's stocks picks, the Nasdaq's Netflix and Autodesk are in the spotlight. Anchor Capital's Seleho Tsatsi joins us with his analysis of these counters and his take on cash. Seleho, thanks so much for your time today. Now let's start off with your first pick, that being Netflix. Right. So I think you're choosing this one because it's the biggest player in that streaming space, right?
Yes, absolutely. If you look at Netflix and compare it to some of its rivals, the likes of Disney, the likes of Warner Brothers, those are fantastic companies with great heritage. But in terms of where the playing field is now, streaming and streaming subscribers, Netflix is really head and shoulders above those peers. They have over 300 million subscribers. Their peers are well behind that. And that's allowing Netflix to reinvest into content at a really substantial rate, which most peers are unable to keep up with. So it's a self-perpetuating cycle that they're getting into now.
Are you not concerned about some of the numbers that they're not revealing anymore as they move forward into their growth trajectory?
Yes, it's unfortunate that they are no longer disclosing subscriber numbers. Similarly, Disney is also not going to be disclosing.
What's the reasoning behind that?
So I think their reasoning is that they're going from being a pure streaming business to now also including advertising. At the moment, gaming is small, but they want to expand their gaming business over time. And so their argument is that, look, we're no longer just a streaming business, and so they don't want to focus on just the streaming numbers. They're saying rather look at what's happening with revenues. If we think back to Apple, they did the same thing where they used to disclose units for how many iPhones, for example, they were selling every year. They stopped that years ago. And some people got nervous at the time, but if you had held on to those shares at the time where they stopped disclosing, you would have done phenomenally well in Apple. So it's not necessarily a negative omen for Netflix.
And I know the ad revenue also growing quite strongly on that front.
Yes, they've said that they are doubling their ad revenue at the moment. So it's growing very, very quickly, obviously off of a small base.
Yeah.
And if you think about the offering that Netflix has for advertisers versus, traditional linear cable, as they call it in the US TV, Netflix knows its customer or the end user or viewer much better than traditional TV does, traditional linear TV. So you could argue that they should be able to charge more and have a better ad offering than some of those peers.
I always wonder how much of a competitor YouTube is in the space. You also think of YouTube when you think of social media as well, because a lot of people consume content on YouTube, whether it's longer form or short form.
I think that's a fantastic point, and it's something that in the office we talk about a lot, the fact that YouTube is probably their biggest, if not one of their biggest competitors. If you look at Netflix's disclosures, every time they report, they usually show streaming market share. And one of the companies that they show in that streaming market share is YouTube. And YouTube's just done phenomenally well in terms of growing that market share over time. And it's really a phenomenal business model in the sense that YouTube is able to get a portion of the revenue generated. So they do pay some revenue out to the content creators, but YouTube puts up none of the money for actually creating that content. It's an amazing business model, whereas obviously Netflix is putting out money for the content it creates. So both great businesses. We also like Alphabet, the parent company of YouTube, but we like Netflix as well.
All right, let's move over to your second pick, that being Autodesk. Just take us through what that company does. I think it operates in the software space, right?
100%.
Yeah.
Yes. So we can think of Autodesk as almost being to architecture, engineering, and construction what Adobe is to things like photography and video editing and graphic design. So most graphic designers or video editors use software that's produced by Adobe. It's kind of the gold standard, right? And so if we think about Autodesk, any architectural professional, for example, in London or New York, who's planning to put up a big skyscraper, they're probably using Autodesk software. So it's really, they are the leaders in that space by some distance.
Okay, so another one where you're choosing it because it's, you know, the strongest player in the space it operates in.
Yes, and you know, we often see in technology that it doesn't pay usually to go with the second or third best player.
I mean, NVIDIA.
Yeah, exactly. You know, if you had gone with Intel over NVIDIA over the last 10 years, you would have had disappointing results. So with Autodesk, we find that because these professionals in architectural and other related industries, because they have really grown up professionally with that software, there's quite a meaningful switching cost. You know, you don't want to start again in terms of learning how to use the software and your workflows. So once you're in, you're locked in, which is nice.
Quickly, before we move over to cash, there's been concerns about whether Autodesk is fairly priced in relation to the earnings it's delivered. What are your thoughts behind that?
Yes, so what we're seeing with them at the moment is that they are re-accelerating growth quite strongly. So they actually reported earnings this week, and in those earnings they raised their guidance. If you look at Autodesk versus its free cash flow, which is another measure of earnings, is trading at about 30 times 12-month trailing free cash flow. So we don't think that it's overly exorbitant at that level. And given the growth that they look like they can deliver, we think that's fine.
All right, and then your next pick, which is not even really a pick, cash, and I'm judging you. I'm really judging you for this one. All right, why cash right now when it seems like markets have become calm yet again? Yes, uncertainty is still the name of the game, but we've been seeing green screens for most part of the week.
Yeah, so I think we went with cash just because in this environment we think it pays to have that flexibility. If you look at where valuations are globally, particularly in the US, they are high versus historical levels, particularly high, so they're at historically high levels. And we're also coming off an environment where we've had a lot of performance since Liberation Day, since April of this year. And so we just think it's not a bad decision to have some flexibility to potentially buy into weakness rather than kind of being caught off the back foot, if that presents itself.
Are you seeing investors moving back to cash just on the back of the opportunity and on the back of how expensive gold is at the moment?
So we actually saw a survey recently, I'm not sure which one it was, it might have been Bank of America, that was showing that cash levels for institutional investors globally are at low levels, so kind of historically low levels. And that ties in with what we're seeing in terms of valuation. So generally investors are close to being fully invested, valuations are high. So I think in terms of the risk spectrum, it's not to say that we're all the way over here, but we're probably closer to having more risks than less risk, if we can put it that way,
And talking about risk and appetite when it comes to equity markets, are you concerned about, a potential correction in markets? There's been talks about an AI bubble that's about to burst.
Yeah, it's always difficult, if not impossible, to time when those corrections are going to come. I think last week we had quite a wobbly week from US markets, but Howard Marks, a famous investor, says, you can't predict, but you can prepare. So we can't predict when it's going to come, but I think we can start preparing for potential volatility. In terms of an AI bubble, I think what we can say is that, look, valuations are high within the AI space. There's a lot of enthusiasm within the AI space. However, recently, and coming back to what happened last week where prices came off, I think investors are asking more questions about what's happening within AI. Are we seeing a return on spend for all this capex within the AI sector? So I wouldn't say there's unbridled optimism, but we've definitely seen strong performance from that part of the market.
All right, let's leave it there, Seleho. Thanks so much for your time and sharing your insights with us today. That was Seleho Tsatsi from Anchor Capital.